Competition in the AI space is growing rapidly, so Nvidia is exploring new industries to drive its next phase of growth. One of its big bets is on robotics. Nvidia plans to launch compact computers designed for humanoid robots in the first half of this year. So, can they become a leading platform for the robotics revolution, just as they did with AI? Or is this move a dead end, potentially creating major problems for Nvidia, much like the metaverse did for Meta not that long ago? Well, today we'll go through our 7-step analysis process to determine Nvidia's current situation, explore the most likely future for this incredible company, and finally we will calculate its intrinsic value to see, is it still a great investment opportunity? If you invested $1,000 in this company 10 years ago, you bought 1,961 shares. Of course, that is adjusted after all the stock splits that happened during that time. And today, those shares would be worth something close to $268,647. And Nvidia also pays dividends, so in that time you would get $322 as dividends. So if we add together the current value of shares and the dividends, we get $268,969. And that is a gain of 26,796% in 10 years. Quite incredible, but only if you found the willpower to never sell it. Like me, I never sold Nvidia. Well, maybe the fact that I also never bought it helped a bit, but I never sold. Individual insiders, that is a check. 3.9% of the company is owned by individual insiders. And we would like to see this number over 2%, so that is great. The management has its skin in the game. And are individual insiders buying? That is an X. We actually see a lot of sale transactions in the last year. And do super investors own this company? That is a check. There are 8 super investors owning shares of Nvidia, including people like Lee Ainsley, Chase Coleman, or David Tepper. And are they buying right now? That is also a check. They bought 1.2 million shares and sold only 66,000 shares in the last quarter. So what do they see in this company? Return on invested capital, that is a check at 22.5% 10-year median returns. And we want to see this number higher than 10%, so such a return is really great. And what do we know about net profit margin? It is also a check averaging 30.6% over 5 years. And the industry median is just 5.1%. So that shows that Nvidia is definitely a leader of this industry. And now let's take a look at share buyback. It is an X. They issued extra 2.9% of shares in the last 10 years. But to be fair, since 2022, they are buying back shares. But then again, is share repurchasing a wise thing to do if the stock price is high? Not really. Companies should do it when the price is low. So is it a mistake, or is Nvidia not as expensive as it seems? Well, we will get to that. And the debt, it is a check. It would take only around a month to pay the long-term debt with a current free cash flow. So they are in a great financial situation. But financial health is only half of the story. The other half is growth. Revenue growth, that is a check at 30.9% 10-year compound annual growth rate. And we would like to see this number higher than 10%. So such a growth is just out of this world. Free cash flow growth, that is another check at 46.2% in the last 10 years. We are really in an absurd territory. Just imagine your income growing by 46% every year for a decade. And earnings per share growth, that is also a check at 51.3% in the last 10 years. Such growth is very, very hard to find. And those numbers explain why we saw this 26,000% growth in the stock price. But that is not all. We also get a small dividend. The dividend yield is less than 0.1%, so shareholders can expect to get 4 cents annually per every share. And the payout ratio, that is an X at 1.3%, so a really small percentage of earnings is distributed as dividends. But for such a fast-growing company, we shouldn't expect huge dividends. And what about dividend growth? It is a check at 16.3% 5-year growth rate. Okay, so on top of the financial health and growth, we also get a small bonus through dividends. But the really important question is, can we get all of that in a reasonable price? Price to earnings ratio is 53.2, so that looks like a really expensive company. But to calculate the intrinsic value of Nvidia, we will use a discounted cash flow analysis. First, we have to estimate the growth of Nvidia for the next 10 years. So in the low scenario, we will estimate a growth of 15% for the first 5 years and then 13%. In the medium, 20% and then 18%. And in the high scenario, 30% and then 25% growth. So the low scenario is close to the predicted growth of the industry, which is around 14.9%. Medium is showing a story in which Nvidia is outperforming its peers, and the high one is predicting that Nvidia will continue to grow in a similar pace it did in the last decade. So with such estimates, the intrinsic value in the low scenario is $71, in the medium $101, and in the high scenario $187. But we are not quite finished yet. We have to always apply a margin of safety to those prices. I use a 30% one. And if you would like to know how to value companies by yourself, which is an essential skill if you really want to become an investor, then head over to stockinvesting.academy and choose our company valuation course. Okay, so with a 30% margin of safety, we get in the low scenario $49, in the medium $71, and in the high one $131. And the current price is around $137. So Nvidia seems to be expensive, but not crazy expensive if we take into account its dominant position in the industry. But before we decide to invest, let's try to put everything we learned into perspective. Nvidia has some great growth and really strong financial health and is a leader in the industry. On the other hand, it is not cheap, but like I said before, it is also not crazy expensive currently. Let's take a look at our Stock Ranking Pro to compare Nvidia to its peers. First of all, if we sort the entire ranking by the overall score, we see that Nvidia is the second best company we ever analyzed. Now let's filter the ranking by industry and let's keep only semiconductor companies. So we are left with 10 companies. And of course, Nvidia has the best overall score. But even if we take the valuation into account, Nvidia still stays on top. So let's open the company overview. And we see that it is just a monster of a company. Everything looks great and the growth is just breaking the scale. So is it the greatest opportunity on the market? Well, it all depends on the story in which we believe in. Are they going to keep their position as a leading force behind AI? And will AI live up to its expectations? Are they going to create a whole new robotics industry and play a crucial role in it? Or is the technology changing so fast and new industries emerge and die so rapidly that we can't really predict the future and it is just a very risky bet? Well, as we often find out, investing is simple, but not easy. If you like this video, then check out my analysis of microchip technology or ASML. Thanks for watching and see you in the next one.